welcome to the CNBC-TV18 special. I'm Shereen, Bhan, and we're discussing the implications and the impact of demonetisation, the current session of Parliament, the progress as far as the goods and services tax is concerned, and also trade in a post-Trump era with the Commerce Minister Nirmala Sitharaman. Ma'am, appreciate you joining us here on CNBC-TV18. I'll come to demonetisation in just a bit, but let me ask you about the matter which has been creating headlines. It's not really a cause for concern at this point in time, but that has to do with the volatility that we've seen in the rupee. Now, if I were to take a look at the emerging market currency basket, then the rupee actually hasn't depreciated very much. The lira, the peso have depreciated significantly more. But I know that the Commerce Ministry's view has been that a weaker rupee, in fact, would be perhaps beneficial, not just for exports, but for the Indian economy. So what is your view currently on the depreciation in the rupee?
If it's just the rupee that we're talking about depreciated value, yes, going by the principle of economics, you would say that will help our exports. But in the last 1.5 years, we have seen globally most currencies fluctuate. And the rupee's fluctuation, in a way, the point that you have by implication meant, has not really been all that much. And that's also been something on which many economists are writing and speaking about. The fluctuation of currencies, the rate at which fluctuation have affected one or the other currency in comparison with the rupee. So eventually, the sum and substance of this currency story is the volatility is now becoming a new normal. Not just talking about rupee, of any currency globally. Depressed demand, contracting economies, traditional markets being affected, newer markets slow to rise. So that's the picture in which our exporters are trying to find their feet.
Demonetisation, and once again we've seen Parliament being adjourned on account of the opposition's demands that the Prime Minister addressed the Rajya Sabha. But keeping the politics aside, if I were to ask you about the economic impact, and once again, whether it's Citi, it's Morgan Stanley, it's a bunch of people have put out various kinds of estimates. The former Prime Minister said that it could impact the GDP to the tune of 2%. Let me just quote to you what the Centre for Monitoring Indian Economy, or the CMIE, has said. They say the cost of demonetisation during the 50-day window till December 30th will be about 1.28 lakh crores. Businesses are expected to pay the biggest price of the demonetisation exercise, and the immediate impact could be around 61,500 crores. This is just one estimate that's been put out by the CMIE. Does the government have any broad estimates that you can share with us now? Because it's been over a fortnight. The problem that people are faced with is that there is a lack of data from the government in terms of what this exercise could actually cost the economy.
Well, at this stage, I would think it'll be too early for me to speak about any figures or numbers with which I can say this is what it's going to be on trade, this is what it is going to be in terms of GDP. But what I would certainly, with a sense of responsibility, be able to say is these 10 days between, say, the 10th and 20th have seen two different developments. One is where sectors where there is labor-intensive production and, difficult to admit, but post-Jan Dhan mission of the government, we still hear some exporters tell us that a lot of laborers, migrant workers, do not have accounts. As a result of which, payments are still being made in cash, and they would want more withdrawal facility over and above what the government has put as a ceiling for a week, so that production is not going to be affected. For me, it's a situation where I have to immediately respond just so that payments are not affected, just so that production is not affected, just so eventually output doesn't suffer, export doesn't suffer. But equally, I'm concerned that in spite of all the push that the government has given, you still have sectors, particularly in export-based activities, employers telling me that accounts are not opened And I'm glad that was reminded when we met with the Export Promotion Councils a couple of days ago. So that is one thing. The second, even
has there been, and you've had a meeting with the Export Promotion Councils, the sense that we get when we talk to textile workers from Surat to Tirupur, etc., is that there is pain at this point in time. Do you have a sense of whether there has been retrenchment and layoffs across these labor-intensive sectors in this past fortnight?
That is where I'm coming to say that even during that interaction, the employers went only that far to say, one, please ensure that cash is given to us, greater withdrawal right is given to us. And in some sectors, particularly textile, weaving and carpet weaving and so on, they said because we fear we may not have adequate cash in hand to disperse, temporarily we might want not to have the production activity because we may not at the end of the day be able to give the payments.
So there has been no relaxation?
No, but then after meeting with them and soon after a few days, we also know the inputs that we are getting from various quarters is that the stress has eased out. Currency is reaching them. And therefore I think equally the worry that was there in the mind should not be any longer going to the extent of having to shut down businesses. But even if there is a level of stress, they would still be able to pay and keep the workers on board. So I don't think beyond the 10 days about which we are talking, there should be any impact on production itself. So the pain and the stress recognized, taken on board, and with the easing of currency gradually, I think things will have let's say, found a way out by the end of this quarter. Even if there is I'm not suggesting the currency problem will have to be, I'm not saying it from that.
So you're saying it will last at least a quarter, the pain that we're talking about?
I'm not talking about the pain. The entire output speculation that we are engaging in, if output is going to be affected at all, even if there is any impact on the output, I don't think it will be beyond this quarter.
Okay.
And as regards people who have voiced to me about concerns about having more limits, more cash is also going in now. And therefore, whether we increase, that's what I'm saying, whether we increase the limit or not, I know by now there is more currency reaching.
But have you got some sense from the Finance Ministry on whether we could expect a relaxation as far as the withdrawal limit is concerned?
I have kept giving a lot of inputs, and many of them have been responded to. We'll see what happens on this.
You know, you said that you can't give us a number at this point in time, but you know, is 2% an exaggeration? Is 2% of an impact on the GDP an overestimation? I mean, this is the former Prime Minister who spoke in Parliament, and consensus at this point in time, if I look at all the reports that have come in from various economists, from brokerages, etc., is between a 1% and on the extreme of 3%. So where would you think the impact could be?
When we are talking of the GDP growing at 7.5, and we constantly are now talking about a range of speculation, 1 to, it could be up to 3%. It's convenient. Each one has their assessment. I'm not disrespecting them. But I think it is too early for anyone to gauge what it is going to be like, because you're talking about, let's say, 13 days after actually this whole problem has started. And therefore, for us to conclude on the basis of this 13 days, because progressively it's improving, the situation is improving. So factoring in all that, and only after that, I would think genuinely, can anyone give us an impression of what it will be, rather than for us at this time risk a number.
Okay.
And that is where I very clearly said, former Prime Minister Dr. Manmohan Singh was a governor once in RBI, Finance Minister, Prime Minister, and he spoke on the floor of the House.
Yes.
So I feel it is too early for anyone to conclude on what will be the number.
Okay, so let me then ask you about the economic argument that the government has presented as to why demonetization is actually going to benefit the Indian economy. One of the key levers that the government seems to suggest is that there will be a significant reduction as far as lending rates and interest rates are concerned. You in the past, along with Mr. Gadkari, have said that the Reserve Bank has room to cut down or bring down rates by as much as 200 basis points. At least that was the hope and the expectation. We are also hearing now from within Parliament, from government, that there should be a radical rate cut. What should that mean? What should we expect when we hear things like there should be a radical rate cut?
First thing, you see as a fallout of this demonetization process, where 500 and 1,000 are no longer legal tender, and a deadline was set for people to come and give the money into their accounts and have it, put into their account rather than keeping it elsewhere, without implying that every 500 and every 1,000 could be black money. The quantum which has reached the banks. And therefore, even this argument is something which you would have heard as well. When money comes into your CASA, current account and savings account, the cost of that money is far, far lower than anything else. So with this kind of money reaching banks, you already see that they are relaxing on a lot of conditions as regards credit. So there is a reason now, there is a justification now for us to believe, if we are worrying about what impact this will have on the economy, for those who have already started giving numbers. Also, for them to factor this in, saying there's a great more now liquidity with banks. I've also today seen somewhere that the Reserve Bank is looking at liquidity ratio that they want to look at and the compliance that they want the banks to follow. So there is now the other side of the story too, which people who are already starting to calculate what kind of an impact it is going to have because of the stress that the economy is undergoing. Also to look at what kind of lubrication does liquidity and this credit availability which is going to give the economy. So this trade-off is something which we'll have to be carefully looking into.
We've got a monetary policy coming up on the 7th of December in the context of demonetization.
In the middle of the 50 days.
Yes, absolutely, in the middle of the 50 days, in the context of demonetization, in the context of what you just said about needing to lubricate the economy. Do you believe a 50 basis point rate cut is the need of the hour?
That will mean that I'm saying too many times, too many numbers about what I would desire. I've already expressed from the point of view of exporters and from the point of view of SMEs in particular. Yes, we will have to look at interest rates.
Okay.
And I at this stage, just as I wouldn't want to, go with those who give a number on the GDP, I wouldn't want to give a number on the interest rate too. But there are enough reasons now, the launch pad as it were.